Colin Cattell with Palisade Radio. This week's guest is Mike Swanson. Mike is the founder and chief editor of WallStreetWindow and author of the book Strategic Stock Trading. Mike ran a hedge fund from 2003 to 2006 that generated a return of roughly 78% for investors. He's also published a financial investment newsletter since 1999, now titled WallStreetWindow Monthly. Mike, thanks for coming on the show.
Oh, thanks for having me. It's great to be here.
Mike, being known for somewhat of a contrarian investor, what kind of stocks or assets do you think are smart to invest in right now?
Well, from a contrarian standpoint, I like to look for sectors and asset classes, if you can find them, that have two characteristics. First of all, they're undervalued, and you can gauge how a sector is undervalued by looking at the stocks in it. By looking at such things as the PEG ratio, the book value, and so forth. And then also looking to see, is that sector has it been in a bull market already for 4 or 5 years, which is the case with the S&P 500 and the NASDAQ, or has it been in a bear market already? And it's dangerous to try to think just because something's falling that it's in a bear market. That's actually one of the easiest ways people lose money in the investment markets. However, often there's a transition phase between a bear market and a bull market in which things go sideways in a base. And during those times, amazingly enough, almost everyone is very negative from a psychological perspective because they have been through the bear market before if they're still holding, or else that bear market's convinced them, that this is a terrible thing to invest in. And that's the situation that I saw in markets in Europe 2 years ago, in Greece in particular, and actually invested over there. And the stocks there were super cheap. Even though all the news on television was bad and so forth, it didn't really matter that these stocks went up. And last year, there was a similar sort of meltdown that took place in Cyprus. It made the news for about a week. There were headlines that some of the Cyprus banks or the depositors some of the depositors in fact found their deposits to be confiscated in a recapitalization scheme. But the thing is that stock market since that week is up quite substantially. And it's probably going to go up. I don't have a position in it, but I'm just using it as an example. It's probably going to go up a lot in the next couple of years. But it was an opportunity to buy there when the news was bad, and that market had actually already fallen over 90%. So when you see markets that are down already substantially, and the stocks are cheap, that sets up a potential opportunity to invest. Now, you mentioned the book I wrote. It's called Strategic Stock Trading. And in it, one of the concepts I use is to break the market up into 4 stages. A bull market, a topping market, a bear market, and this sideways bottoming type market. And you can see this and identify one of these markets really easily by looking at the 150 and 200-day moving averages on any simple stock chart. In a bull market, those moving averages go up. They act as support. In bear markets, they curl down and act as resistance. And in this sideways basing market, they go sideways. And then they start to turn up when a new bull market starts. And that's the exact position that the mining stocks are in. If you look at the mining stock index, HUI, for example, you'll see that it has had resistance around 250 for about a year now and support below 200, but it's been in a range. It's not crashing. Everyone's negative. You turn on CNBC and they want to say gold's no good. There's some people who have theories that claim it's going to crash. It's all nonsense. We're bottoming. We're building this bottoming base. 250 is the resistance on the HUI gold stock index. And I think it's good chance we're going to go through that sometime soon in the next few weeks. And if it does, what people need to realize is that will mean that we're in a new bull market, and it's just up from there. The most bull markets last 3 to 5 years, but most of the gains come in the beginning. So I think it's actually important for people to accumulate shares now. That's what I've been doing because the way I see it, this is essentially a rocket that's being fueled up, and at any moment someone's going to press the ignition switch.
And Mike, how exactly are you looking to play the gold mining stocks? Are you speculating on the very small companies, or are you looking at companies that are mining gold out of the ground at cash cost close to the gold price or well in the money? What's the best strategy to make money here?
Well, what I've done is I've built like a core position by buying the simple mining stock ETFs. So you have GDX and GDXJ, which trade in the United States. GDXJ has got some more of the smaller cap ones in it. And then I've bought some mining stocks that are the large caps that do pay dividends around that core position. And then I've also bought some junior mining stocks that produce around 100,000 to 500,000 shares of gold. And I look for those are the kind of the ones that I like to see to take some risks in because they tend to actually go up the most that have earnings. And the reason why is because right now they're priced really cheaply because of what the bear market has done. It's possible to find stocks with peg ratios of 0.3 and 0.5 when one is fully valued. And these stocks are companies that will be producing more gold in the coming years because they're ramping up production or they got mines that they're going to put into production. So those are some of the kind of small cap stocks that I like to put money in. Now there's also exploration stocks that can go up even more than that. I mean, you're talking about gains from 5 cents to $5 or $10 even, but they don't have any earnings, and I don't know how to value them without seeing earnings statements. You really have to be an expert in the properties and in geology to be able to pick the right ones out. And you got to, or know someone like that can help you. And I'm just not an expert on that stuff. So I kind of myself stay away from them, even though the right ones can do tremendous.
And Mike, you spoke about the basing pattern that we're in where the gold miners are going sideways. Does the length of time of the bear market and the basing pattern have any implications on how long this next bull market will last?
Well, one general rule of thumb, it'll sound kind of funny, but it's common sense is the truth. The longer a basing phase goes on, the closer you are to the start of a new bull market. So, if you look at the last two basing phases with the mining stocks, they only took place over a couple months in 2008, 2009. It didn't last very long in that at all, and it was basically a V bottom and the prices went up tremendously into 2011. This time we've got an entire year. I mean, it's so easy to identify in a chart. And generally speaking, it is another rule that the longer the base is, the higher, something can go up and the longer it can last. So I actually think that this next bull market the last one lasted 2.5 years. I think this one can last much longer than that, maybe 5 years, maybe even, and go up ultimately higher than the highs of 2011. Now, it's not just because of this basing concept. I actually think that we do have some very serious fundamental problems with the financial markets in the United States, which can contribute to a much higher gold bull market than any of us may even realize could occur. And what I'm referring to specifically, I'm not going to say the country's going bankrupt or say something that could be true, but also sounds totally outrageous. I'm just going to point to a simple fact, a simple reality that is evident to anyone if you just think for a moment. In the last couple bear markets that took place in the United States, recessions, bear markets, disasters, the Federal Reserve responded by lowering interest rates. In the last bear market of 2008, they lowered interest rates to zero as housing prices crashed, as the banking system was revealed to be insolvent, and they bailed everything out. But they lowered rates to zero. In the 2000 bear market, they also did rapid rate cuts. Greenspan cut rates by 50 points, I think by 75 points the first time, but very rapid rate cuts. In the bond market, at the same time, you can't get any interest on your CDs. You can't get any interest on your bonds. It's madness to try to buy these things. So that means that when the next bear market comes, there's two critical things that will happen, a recession or whatever. And one, it's going to happen one day. That's the way the seasons work. The Fed won't be able to lower interest rates. They won't be able to lower interest rates because they already got them at zero. And they're going to be trapped. The only response they'll have is to print money. And then at the same time, the bond market, which has acted as a safe haven for people that don't want to be in stocks, won't act as a safe haven next time because interest rates are zero. So people will be looking for gold as a safe haven investment. It may take a couple years before people start to think that way, but I think one day they will, and I think that will ultimately be a catalyst. That will be what brings the man in the street, the regular person, into the gold market. We may get the breakout now. I think so. I think we'll break out into a new bull market. I think we can see the HUI even up to 500 in a year and a half, maybe 2 years. But the average person, the average American won't get in. They won't get in because of that, just because things go up. In the U.S. stock market, they got out in 2009 and they didn't get back in till last year. It took 4 years of gains for them to get back. It takes people a long time. So one day they will, and they'll get it like that's their only alternative. And that's what people did in the late 70s. I think they'll do it again.
And if there's a correction or a crash in the general equities, how do you see that affecting the gold equities?
Well, I think it's really interesting. I'm not going to say the stock market's going to crash, like fall 10% in a day or something anytime soon. But bear markets occur. I mean, we could easily see a new bear market this fall or next year. I can't really predict when it's going to happen, but one will happen eventually. I mean, we can get a 15% correction from here would be, a normal thing too. And interesting enough, I actually think the gold stocks and gold itself will go up, which may take people by surprise. But the reason why is that in every bear market, there's some asset class or a sector that seems to start a new bull market just as the general stock market rolls over. In 2000, it was utility stocks and tobacco stocks, which interestingly enough, the tobacco stocks back in 2000 had been in bear markets worse even than what we've seen in the gold stocks since 2011. People thought that Philip Morris, RGR Reynolds, and 5 or 6 other small tobacco companies would cease to exist even because the government was attacking them with lawsuits and regulations and making it seem like cigarettes were going to be outlawed or something, drastic was going to happen to their businesses. And they were in terrible bear markets. But that marked the bottom for these tobacco stocks, and they went up it started breaking out around March, April 2000, just as everything else was popping. And in the 2008 bear market, in 2007, as the market rolled over, interesting enough, the U.S. dollar and Treasury bonds started bull markets. This time, I don't think they're going to be the safe havens. And I think, interesting enough, it appears that it could be that gold, commodities, the mining stocks will be starting new bull markets over the next couple weeks or month or whatever, just as weakness begins in the equity market, possibly. It's a possible scenario, but the bottom line is I don't think a bear market will hurt gold. I think it's quite the opposite.
Well, Mike, thanks so much for coming on the show. I'm even more bullish on gold stocks after this interview.
That's great. Everyone needs to accumulate tomorrow more.
How can listeners get in touch with you and read your information?
Just go to my website, WallStreetWindow.com. WallStreetWindow.com. It's all one word.
Great. Thanks so much.
Thank you.